markets. We want to take a deep dive now into the Bloomberg. You can find our charts using the function at the bottom of the screen. And my chart here is a great overview of just how much of a game changer Donald Trump's election was to stocks and bonds. You can call it the great reflationary rotation trade. Global equities have seen a massive boost, quantified at $2 trillion. That's how much their market cap has gone up. And that's roughly the size of the loss in the broadest global bond index, which is the Bloomberg Barclays Global Aggregate Index. It was the worst month for global bonds in dollar terms on record. So pretty incredible. Carl Icahn, as you know, Joe, we were talking to him yesterday. He started buying S&P 500 futures on election night. We spoke with him yesterday on whether he's just as bullish now, days after the election, a couple weeks after the election. He says he's not going to say run out and buy stocks because he thinks it's run a little ahead of itself.
It really has been an absolutely breathtaking rally.
Yep.
All right, I want to talk a little bit more about the ECB and its aftermath. I'm looking at the German yield curve, particularly the 530 spread, and this chart represents every day going back to 2008. On this index. And as you can see, today's move at the very right end of the chart is the biggest jump in the spread since 2008. So it really sort of speaks to how investors have interpreted this move, which means higher rates in the long term, thanks to perhaps more growth, more inflation, stuff like that, but not nearly as high in the short term as this stimulus is going to continue. And, initially the thought was taper, but then people sort of reinterpreted that move, and they're like, actually, it just looks like a lot more bond buying for now, and it could go on for a while. So shorter rates or lower rates in the short term.
Lower rates in the short term.